Hello everyone, my name is Matthew Frailey with BreakpointTrades.com, bringing you advanced technical analysis and commentary on the markets, commodities, trade ideas, and mechanical systems, and we've been doing that since 2003. So anyway, let's go ahead and get right into it. So this video recording, I'm making it about 11 p.m. Eastern Standard Time on Thursday evening, September 30th. Earlier today, we sent out our general newsletter, but I wanted to do a video separately. Meant to do it earlier, but you know, life gets in the way sometimes. Again, this video will be fine to review it on Friday. A lot of you will probably be reviewing this on Friday anyway, since I'm recording it kind of late. This is my general theme. I'm not going to cover all the charts I normally do, so get through this pretty quickly. Here's some comments, texts. That was from the newsletter that was sent out earlier. You can read this, pause the audio, video if you want to do so. But, you know, basically, markets had a nice sell-off this week. Today, the S&P closed down 50 points, the Dow down over 500. In my newsletter yesterday, I showed that the S&P had a very obvious bear flag on the 60-minute, bear pennant on the 15-minute, and those obviously played out. Last week, if you've been following our market newsletters, my videos on YouTube, you know that I was looking for the market to form a lower high on last week's rally and come back down, and that's exactly what's transpired. Okay, so now we're getting a bit oversold. We're getting into the meat of things. It's the 30th, so September is closed out. It's been a nice down month, which, you know, September seasonality-wise tends to be a down month. So we'll take a look at that. Short term, I want to show you a few things that I'm looking at tomorrow, or, you know, again, you're probably listening to this on Friday. For a short-term bottom at least, or some sort of trade bottom, what I would like to see on Friday, I would love to see the market actually open down. The cash market, say, gap to the downside. That's what you call, you know, a red to green. So where the market would open red, open down, and then reverse. You don't typically get bottoms on gap ups. So I would prefer to see the market open down, negative on Friday morning. And, you know, I'll be watching it, and perhaps I'll buy that long, depending on how things look. So that's what I'll be watching for if we get that on Friday morning. And there's still plenty of room to the downside should the indexes want to keep going down, like the 200-day on the moving average on the S&P, which I've been showing, various other things. But anyway, let's go ahead and get started with things. So here's what the index sector table, what transpired today. You can see the major indexes. Nice losses here. Nice losses for the week. Remember, last week's videos, I was looking for the market to put in a lower high and sell off again, and that's what's happened here. Okay, nice sell-off this week. And today, we follow 21 of the major market sectors. Most of them were down today. Out of the 21, only 2 were slightly up for the week. Most of them were down as well. Even the dollar was down a little bit today. Crypto is up a little bit. Commodities had a decent day, except for copper, corn, and precious metals actually bounced. There's some individual stocks that I'm going to be monitoring there now. Okay, let's go ahead and move on. And let's go ahead and start with the quarterly charts. So today is the end of the month, September, but it's also the end of the quarter. So I've been showing these quarterly charts. I think I showed these a couple weeks ago, and I said it'd be interesting to see how these end for the month. Well, if you take a look at the candles here, not seeing some great action, guys. So look at this doji candlestick you have on the S&P after this extended run. That is a scary looking candle. Look at it on the Nasdaq. Look at that on the Nasdaq 100. The Dow, you do have sort of a doji, but it's not as well defined. But these are not pretty patterns, guys. And so you notice that I drew little horizontal lines below the tail of those dojis. That's important because a move below this actually gives you an objective short signal, and your trade you know, with a stop right here at the highs. This is due, these candles typically start or signal a potential reversion to mean pullback. Again, as you know, we've had hella runs from this time, which is, I've been talking about, these runs are not sustainable, right? So now I'm not calling for an outright crash at this point, but these candles for the quarterly, you know, are very concerning. So a move below the low of these candles, so in the S&P here, the low of this, again, would be a potential trigger point for an exit. Say, you know, maybe in a strategic type account. So take note. Next. Here's another quarterly view of the S&P showing you that candle. So the low of this quarterly candle is 42.33. So let's round that down to 42.30. So a move below 42.30, again, would be an objective short. And for at least a move down to this 5 EMA or the 9 EMA. You know, again, think of it like a rubber band. Markets, you know, they get too far stretched away from these short-term moving averages, then they pull back to it. That's a scary looking candle. And, you know, markets had a long run, so we all know that. So we'll see. Next. This chart shows you the monthly view. So each candle is 1 month. You know, I talked about being 7 months up in a row, being due for a pullback, plus seasonality wise, guys. Here's some various seasonality charts from various sources. And they all show, you know, I mean, some of these go back to, I think one of these goes back to 1928. I saw another one too that went back, you know, 120 years. But they all show typical weakness in September and even into early October. And obviously that's played out. S&P down about 4.75% for the month. Now, just a typical reversion to mean could at least take you to the 9 EMA. I always consider that your rubber band, where your rubber band is no longer stretched. So think of that as your mean. Price gets too far away from the 9 EMA, then snaps back to it. But nice down month here so far for September, which is now closed. Next. Here's a daily view of some of these major indexes. So again, we started that correction in early September, which we expected. We got the initial leg down, rallied up the previous week. I was looking for a lower high, which we got, and then now we're moving down again in this potential wave C. The Russell at the bottom, IWM's been in this course channel since March. The Nasdaq composite itself is actually nearing a support. Now let's go ahead and move on to some individual indexes. Here's the Dow, so just doing a brief update. On Monday, I talked about this tag in its resistance area, and like, lo and behold, it found a lower high. It's now coming back. You got a big support down here, which it almost bounced off last time, got pretty close enough for government work anyway. And coming down again, you have to wonder if we're going to tag this, you know, 200-day moving average, since that's a target. You know, it's like a magnet basically. And now hopefully that area holds. If it doesn't, then you have a potential move, you know, down to that area. This is a thin zone, is what you call that. So, but for now, that's a potential support. Moving on. Here, moving on to the daily S&P chart. So here's the S&P. We had that initial sell-off and rally up, lower high, selling down. These are the parallel channel lines. So getting close to there, you have a support zone here. And if you don't bounce there, then of course you have the 200-day moving average. What we like to talk about is the moving average ribbons, how great of guides these are. A moving average ribbon was bullishly stacked. It flipped back here, you know, basically right in here. And it's that first bounce where you get the negative pinch, first pinch on the underside. That was your low risk short opportunity right there. Very useful, these moving average ribbons. Here's another daily view of the S&P that I've been showing. with the focus on the 50-day moving average. A lot of people were watching that 50-day moving average in September thinking it would bounce off of there, just like we did these previous 7 times. We didn't think so. We didn't think, lucky number 7. We have it in the comments. And we did. We sliced right through it, bounced off this 100-day moving average, rallied up. We favored a lower high wave B with this initial sell-off, ABC of A, lower high wave B, and we're now working on this wave C. We're basically right back to the low of A. Could you have a little double bottom here? Perhaps. But it's not a very strong technical area. This would be a stronger support right in here. Notice if you measure the height of this initial leg down, wave A, and you subtract it from here, a perfect ABC would be right around this area, 4250 to 4225. All right. Otherwise, then you have the 200-day moving average. I also talked about the MACD. Very simple thing about the MACD. We all use the MACD for divergences, negative divergences, positive divergences, when the lines cross. But another thing, guys, when you're on trends, when you're uptrending, MACD tends to stay above 0. And it fell below 0 back here on this initial decline, and that was bearish. Next. Moving on to some intraday charts. Here's a 2-hour time frame. So lower high bounce last week. Sell off this week. We're right here again. Could you have a double bottom rally right here? You could, but I would view that as, I don't think we form a good bottom here. If we rally here, I think then we just come down again. All right. Otherwise, notice there's another support range down here. I talked about on Friday morning, I'm hoping to see a gap down, like a initial sell-off, a red. I'd like to see that. Then maybe we can get some sort of bounce. Again, A, B, C. We're working on this C. That would be your next big support area. And then here, way down here at 4160. Moving on. Here's a 60-minute view of the S&P. Has this wave count. You can see the clear 5-wave structure we had up to here in early September, which we talked about. The initial 5-wave decline down here, which was labeled wave A. Then this ABC bounce here, wave B. Then another sell-off is major wave A in parentheses. Then ABC type rally up, major wave B, lower high, which we talked about. Performed perfectly, and then we got this sell-off this week, and working on this major wave C. Like I said, we're right back to the low from previous week. Could you have a double bottom here? You could, but you don't really have any good divergence, and a lot of other things look quite weak. Now you can count 5 waves here, so that's positive for the bulls that we're working on this wave 5. And the wave 5 can extend. Like I said, though, I'd rather see a move down in the morning and then a reversal. Okay. Next. Here's a 15-minute chart. So on Wednesday's newsletter, I talked about this bear flag, bear pennant, and that played out obviously today for a great short. Here's another chart, SPXU. That's the triple inverse ETF for the S&P. And talked about on Wednesday that this looked like a cup and handle. You can clearly see it here. Beautiful pattern. Busted out of there this morning. Pulled back. You actually had a second opportunity here late this afternoon on Thursday to buy that. So if you missed that, if you didn't chase that initial move, got the pull back into the trend line support and then rally. Still looks bullish to me. Finally, here's a 5-minute view of the S&P. I've been showing this the last couple of days. We've been in a 60-point channel range. Notice what happened today. We opened, and it wasn't that weak. We sold off here in the late morning, lost this channel support, sold down here. We had an ABC rally into the afternoon that stalled right at the bottom of the channel. Remember, in technical analysis, you break support, it becomes resistance. So this was a good short right here late in the day. Next, moving on to the KISS charts. So here's the daily S&P KISS. we talked about the moving average ribbon, how it was bearishly pinching to the underside, which when you does that, look for a low risk short opportunity, and we were below the ATR. All right. Now, one thing to note here, this is the weekly ATR. So this is the daily ATR here. This is the weekly. So we're approaching that. Going to be interesting to see if we hold that or not on Friday. Again, here's the 200-day moving average down here if you really want to get a good sell-off. Here's the weekly KISS systems. And none of these DVTs on the weeklies have been hit yet, but obviously they're getting close. So there's the S&P, here's the Nasdaq, and here's the Dow and IWM, which has honestly the most room. So those weeklies are still intact for now. Moving on to the triple Qs. So notice, again, just like the S&P, sold off initially, rallied up, formed a lower high, had your bearish moving average pinch from the underside, and sold off. This made a new low while the S&P did not. It's starting to lose the support area, and you're kind of in a thin zone here. So there's really not, as I've been talking about in my videos, there's not much support here, maybe till you get to here. Or do you eventually need to go down to here maybe? Something to consider, but these are little thin zones. Next. Here's a 60-minute view. Again, talked about this umbrella top back here in early September. Honestly played out spectacularly for a good short. Initial sell-off, wave A, lower high rally B, into the 61.8 fib resistance. Right now, on the C down, we do have some positive divergence on the MACD. So we'll see if we can get a bounce from that or not. And then a little bit on the RSI. Here's the KISS chart. Again, very similar to the S&P. You can see the moving average ribbon pinch, bearish squeeze back here, lower high, and we're nearing the ATR. Here's the KISS charts. One thing to note on the KISS charts, that we're getting quite stretched to the downside. The 195-minute, that's the half-day chart. Notice, again, when the ribbons, when they pinch, these gives you low-risk trade opportunities, right? Like right here, right, like that. But also, when they get too wide like this, you're due for a reversion to mean bounce. It's getting pretty dang wide right here. So that's why I stated that if we open up quite weak on Friday morning, we may be due for one of these reversion to mean bounces. Just something to consider. Next. Here's IWM small caps. Again, they've been in this range all year long. That rally early in the week stalled right at this trend line. Notice you have a coil, potential big coil forming within the larger rectangle pattern. So slight close below the 200-day moving average. To me, I don't think that's significant though, really. The real pattern is this coil that's forming. We're just ping-ponging between these trend lines at the moment. All right, so that's it for the indexes, guys. Futures are down a little bit tonight, which is a good thing. We'll look at that before I conclude the newsletter, but let's move on. Here's the VIX. VIX closed up today. The last time it gave a buy signal back here when it closed outside the bands and then back inside. That was a pretty good buy signal. I need to put a little arrow there. And, those signals have been pretty good for years when you close outside the bands and then back inside. All right. Now, could you get another example here of, if the market were to really sell off, could you get it closing outside the VIX, the upper Bollinger Bands again? You could, but it's going to take a heck of a sell-off to do that. Okay. Not going to be very easy, but who knows in this market? Anything's possible. Next. Here's the VXN. That's the VIX for the Nasdaq 100. Now, it actually closed below its lower Bollinger Bands on Thursday for a buy signal. You could see that some of the previous buy signals this year, and they've all been decent trades. Okay, sometimes short-term trades like this one. Sometimes decent bottom trades like these ones. All right. Then, of course, we got the sell-off today. All right, but you know, it is getting overdue for a bounce, so something to be aware of. Next, TLT 20-year bonds. We've had this complex ABC correction. You know, nice sell-off from that wave C. So far, price is kind of trying to find a little support around the 200-day moving average. We'll see if it can do that or not. Long-term rates, as you know, have had a nice rally. They move inverse to bonds. J&K high yield corporate. This tends to move with market tends to move with this. It's hanging by a thread on the 50-day. Below here, there's not a lot of support. If it were to bust down through here, that would be, you know, that would be a reason for the market to sell off more. All right, let's look at some market sectors. Here's the transports. You know, they've been weak since May. Little bounce off the support over the previous week, but notice stalled right at this trend line. Guys, whenever you draw a pattern, we had this as a coil originally, extend those trend lines out because many times they're still important, just like here where you tested it and stalled. But nice sell-off again. It looks quite weak, honestly. It's nicely below the 200-day moving average now. Here's the technology. A lot of money into technology, so where it goes, the market tends to go. You had your bearish squeeze back here in the lower high bounce. Talked about it the other day. Not a lot of support here. There's a little bit of support right here. Then below that, not until you get down to this April highs. And by then, you're going to be damn close to the 200-day moving average. If we get weakness on the morning, maybe we could tag this on Friday. Here's the technology sector. I commented on Monday it looked like a bear flag. It's been playing out. Retail sector. Ugly. Been showing this as a coil. Look at this sell-off here. 200-day moving average isn't very far away now. Healthcare also continues to melt down. And it was one of the strong sectors all year long. Had a perfect textbook double top back here. Lost this support, which became resistance. You got a little back test here. Really no support until you get to this area. The May highs, May, June highs. And then, you know, 200-day below that. Utilities, which were down 14 days in a row here, 14 red candles, was due for a statistical mean bounce. You did get a one-day bounce, but then sold off today. Still not a great looking bottoming pattern. This still may need to go lower, but you got a one-day bouncer out of it. Real estate, again, lost this shelf support back here, rallied up, kind of back tested it as resistance. There's your next supports. Finally, energy, one of the strong areas. I think this is the only sector that's actually uptrending. So had this nice inverse head and shoulder pattern, busted out of here. We had some energy plays on the website, gave you great trades. Pulling back, this is a sector I would be interested, guys, on buying a pullback, which we're getting. So if we get a pullback like this, I'd be interested in buying. Okay, so something to watch. Looking at commodities real quickly. Here's crude oil. As you know, busted out of this parallel channel back in early September. Pulled back, made a higher low above the broken trend line. Tested this highs, but longer term, guys, I think crude is going to go way up. I know a lot of people are calling for that. So, bullish on crude oil long term. Natural gas, been talking about natural gas inventories. You know, there's a lot of projections for this to go much higher this fall. It's had a hell of a year. Look at this. It's more than, you know, it's up 250% from April. Got extended here, pulled back, bounced right off the 9 EMA, trying to go again. Natural gas ETF, UNG, same deal. Copper. Now, copper is one of the weak ETFs. Now, one reason for that could be, you know, I've been hearing a lot of these there's a lot of concerns with the economies and markets. These supply chain issues, energy issues over in China, you know, worker shortages, stuff like that. Could that cause, maybe a contraction on some of the utilization on some of the commodities like, say, copper, which is used in, a lot of manufacturing. Anyway, coiling here, but it doesn't look too strong at the moment. If it loses this area, that's your next support. We'll see if it can hold this or not. One I haven't shown for a while, sugar. This is the ETF, cane. This is a bullish setup. If you're looking for something, maybe we get a bust out of here maybe. But one to watch. You can trade this. Uranium ETF, as you know, I've been bullish on uranium all year long. Monitoring the bullish view here is you got a nice ABC pullback. I bought a little bit today. But we'll see what it does. I will add to my position if it does weaken. Say if it wants to tag the 50-day here, then I may add some more. Okay, but I am looking to re-enter more of this position. I did buy a little bit. I don't have a chart of the U.S. dollar tonight. Here's gold. So gold, nice bounce today. Otherwise, it's still in the overall same pattern. Watch the ratio here, the GDX-GLD ratio. Here's the gold stock ETF. It's been super weak, bouncing off a little area here. Next, here's the 60-minute chart of GDX. This little head and shoulder pattern played out. On Wednesday, I talked about that this needed another sell-off to form a wedge, and that's what we got on Thursday. Wedges have 5 waves. You can count the 1, 2, 3, 4, 5. So you had a nice little wedge here and an initial bounce. So you got to trade. Now we'll see if we can form a higher low or not. Now here, I looked at the precious metal stocks. Here's the ones I'm interested in. If the sector does try to bottom out, it's certainly overdue. IAG, I like the little potential bottoming pattern here. MACD divergence, volume patterns are decent. So this is what I'm monitoring. I do own a little bit of it right now. HMY, I really like this one. Textbook falling wedge pattern, and you do have 5 waves in place. I bought a little bit of it today, but again, it's still in the pattern. If it breaks the pattern, I will add to it. And finally, GSS. Tight little coil here I'm monitoring. I like these coils because they can be explosive. All right, moving on to some other stocks. So I've been showing you some of these FANG stocks like Apple or Crapple, busted that support, back tested, trend line is resistance here, sold off. Right here you got a little shelf support, but below here you don't have much support until there's a thin zone until you get down into here in the 200-day. So be aware. Microsoft had a nice double top, and it's filling this little gap I pointed out. Otherwise, below that, boy, not a lot of support down here. Google, same deal. It's at kind of a support area, undercutting it a little bit, but here's your next support zones. Amazon has this kind of head and shoulder look to it. So we'll see. These are getting a bit oversold though, guys. Moving on. CYTK. I'm not going to move on away from that. Let's talk about a couple other ones. Disney. So here's a trade idea I want to follow up on. So I gave this as a short idea about a week ago. It's had a sell-off here. They warned that their earnings would be negatively impacted. And it started to have a bounce. It was on light volume, right? And draw that in. Light volume bounce here. And I said to short, look to short a bounce into these moving averages. Okay, so, I feel a lot of, I don't want to call it novices, but a lot of people would want to short the trend line here. And that may work just fine. This is a weak support, right? Little shelf support. But to me, the low risk trade, the pro trade, is shorting the weak bounce into the resistance area, because then you have a tight stop right here. So if you shorted here, or if you even, you know, shorted this day, you got a tight stop here. You can then add your short on this trend line break. Okay. But this looks super weak. Congrats to any of you guys who followed this. Let's take a look at the weekly chart. Here's the weekly view of Disney. Quite honestly, you could see here, not much support until you get down to here. So this could be an overall target down in the low 150s. ATUS, here's the long idea I put out on Wednesday as reversion to mean. This is an example of those rubber band trades. They get too extended. You need a trigger. A trigger was taking out this doji high. Boom, and you got that today. Maybe get up to the 9 EMA here. Costco, here's one that looks weak. Kind of a head and shoulder top look. Breaking this could be a nice short. UPS working its way lower, trying to fill this gap. CMG, we showed you this little shelf support starting to break. Not much support in this sucker either. AEO, here's a shelf support. I'd rather short this on a little weak bounce if you get it, but I don't know if you're going to get it, you know, like this. The other thing to do would be if it breaks this and then back tests this, would be your lower short, risk short too. Okay. Looking at a couple other things here. Let's look at futures tonight. ES down 25. Nice to see. Like I said, I'd like to see a weak opening on Friday. And the last thing, let me try to pull it up here. The SPY systems. As you know, there's 21 of these SPY systems. One of the subsystems took a first entry today, okay, on the QEBTS. As you know, the systems recently did some nice trades on that decline. Caught some nice little quick bounce trades, reversion to mean type trades. So we got a trade entry today. If you didn't take the trade, you know, you'll probably have a better opportunity on Friday morning for a lower price. Okay. Remember, guys, these are reversion to mean systems. Should the market work lower, sometimes they need 2 or 3 entries. Just like this one, it needed 2 entries before it got its winner. Okay. This is out of the 21 systems, there's 12 long systems. Here's all the individual ones. I will make a separate video one day about these. You can see this one of the systems today, the QEBTS. Let's take a look at the trade statistics. Profit factor 35, 90% winning trades, 134 trades. Data goes back to 1995 on this. 1997. So pretty good stats. Another subsystem actually went long as well. It was trying to find where it is. I don't see it now. I thought the bull exhaust 2 went long here, but I don't see it at the moment. Anyway, we got an entry here. Like I said, the way these reversion to mean systems works, sometimes, you know, you can get 2 or 3 entries before you get your bounce. That's the way they work. So otherwise, these are high probability. Most of these have 90% or higher winning trades. Anyway, guys, again, we'll see what happens on Friday morning. Also, I will be talking to you on the weekend with a new video. Take care and enjoy your Friday. Thanks.